Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA. Jeff, thanks for coming in on this Friday.
Always a pleasure, mate. Always a pleasure.
Now, let's take a look at how markets in the region are performing first, and then we'll get your insights. We'll start with the cryptocurrency market. Now, Bitcoin is at 37,994. It's down 2.12%. Ethereum is at 2,351. It's down 3.07%. If we look at the stock exchanges across the region, we've got the SGX, which is at 3,130.26. It's down 0.26%. Bursa Malaysia is at 1,572.89. It's up 0.13%. Nikkei is at 29,020. It's up 0.01%, so pretty flat. Shanghai Composite is at 3,508.29. It's down 0.49%. The Hang Seng is at 28,728. It's up 0.59%. The ASX 200 is up 0.33% at 7,383. Rounding up the numbers, we've got the Kospi, which is at 3,269. It's up 0.15%. So what's your view on market performance this morning, Jeff?
Well, it's interesting. It's a bit of a mixed day in Asia, but what we saw was a mixed day in New York overnight. We saw the NASDAQ rally quite strongly, but the Dow fall quite strongly. So the market's response to what is seemingly a less dovish than previously FOMC, Federal Reserve, has been to unwind that cyclical rotation trade, i.e. They're selling out of companies in the Dow, which probably have a bigger beta to commodities, for example, and extraction of commodities, and moving back to their safe, happy place, which is big technology stocks. And in Asia today, we seem to be seeing the same thing. Those more high-tech markets, such as South Korea, Japan, and Hong Kong, where a lot of the big China tech heavyweights are actually listed, they're actually modestly higher today, but we're seeing those ones that are perhaps more cyclical rotation darlings, you know, your ASEAN markets such as Singapore and Indonesia, Malaysia, and also to a certain extent China, their main board, they're all falling. So I think we're just sort of seeing a gentle replication of what we saw rotationally in Wall Street overnight.
Now, the big news that's overnight and also then dominating markets this first half of the day is a correction in the price of commodities, which has run up quite a lot. Now, that's obviously because China takes steps to control the prices that are rising, also because the US dollar is strengthening. Now, for just the backstory for our audience, the Chinese government has announced a plan on Wednesday to release reserves of key metals, including copper and aluminium. Now, they've warned financial markets against excessive speculation as well. Now, given this scenario, Jeff, China clamping down, China, big consumer of commodities, will this be enough to stem the rise in prices across the world?
Right. I think we can also add in speculative long positioning into that equation as well, because when you look at certain markets such as gold, oil, and commodities, a lot of speculative long positioning in there as well, and that's being washed out at the moment. But as far as China goes, it's not a battle that they can win in the longer term. At the end of the day, China is a huge net importer of commodities. It's the world's factory. Stuff comes in on boats from around the world. It gets crushed down and then made into products that we all buy around the globe. In that case, in the longer term, I don't see how they can possibly control or cap prices in the longer term, unless the market globally suddenly declines, which probably won't be a good thing either for what it signals. Yes, they have strategic reserves of all of these minerals and these industrial metals. How much they have is actually a state secret, so we don't know. But at the end of the day, when they run out of those, the market will set the price that China will have to pay. And then if China wants to restock those strategic supplies, they're going to have to go to the international markets and buy them as well. So net, I think they can have an effect in the short term, and their timing has been quite well in this case. But in the medium to long term, it's just not a battle that they can win.
So then where are the opportunities for equity and commodity trades who want to, especially traders who want to profit from this?
Well, I think some patience is warranted here. I do believe that the global recovery stays on track, and the fact that the FOMC decided to be less dovish this time around this week is actually a vote of confidence in that recovery, because they wouldn't be changing their dialogue if they didn't think the recovery was on track. So I believe the global recovery is on track, and if investors are patient, they're going to be able to pick up some of these commodity ETFs or futures, or however they wish to express these views, mining companies, what have you, at potentially better levels than they are now. So I think this is going to be a dip to buy into for the medium to long term.
So it's interesting you said dip to buy into for the long term, because I took a look earlier today at some of the mining stocks in Australia, who will obviously benefit, or who you would think would correct downwards, and there would present buying opportunities. Interesting how little they've fallen. So let me just select three. Rio Tinto only has declined 0.23%. BHP has only dropped 1.45%. Fortescue Metals only 0.27%. So obviously the market still believes that, you know, these stocks are still great value for money.
Yeah, exactly. And you know, the dip may be quite shallow. I think there may be stronger dips in the actual commodity prices themselves rather than the actual extraction companies. I mean, I think the Dow fell overnight because of this this correlation. So maybe the opportunities are there in secondary miners or what have you in the US or North American markets. But I think the fact that those prices have held so strongly, as you said, is extremely telling. At the end of the day, economics wins even against China. And so as a net huge importer, a buyer's strike is only going to go on, is only going to be effective for so long, because you know, Australia has other places that they can sell all of these products to. There are other refiners and other producers around the world, and maybe that will let those producers actually increase the scale of what they're doing as well without having to compete against China. So you can see China's conundrum in the medium to long term.
Now, Jeff, it's Friday. What are we looking out for in the second half of the day that could move markets?
You know, it's we've had the Bank of Japan policy meeting, and they were unchanged. They've extended some of their pandemic support measures. That was all exactly as expected. The data calendar is really light for the rest of the day now. So we've got UK retail sales. I think markets are pretty much going to settle down in Asia and see out the rest of the week quietly from here. Europe will probably open slightly lower because it's very much a cyclical recovery play as well. And I think actually what we're going to be watching at the end of the week is how Wall Street finishes. Is this rotation trade that we saw overnight from the Dow into the NASDAQ going to continue? And if it is, then that may set up, well, I believe it will set up commodity prices for a weak start to next week.
Now, Jeff, thank you very much for coming in this Friday.
Always a pleasure, mate.
Now, we've been speaking to Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our LinkedIn and Facebook pages, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.